You are listening to The Vocal Technologist. Spoken tech for your ears.
Wow. Okay, just trying to keep up with everything happening in Web3 right now. It feels like drinking from 3 different fire hoses at once. You've got policymakers over here, big banks making moves over there, and then the actual tech building underneath it all. It's just a lot.
It really is. But, you know, for the first time, it feels like those streams are starting to actually flow in the same direction, or at least into the same river delta, maybe. We're moving past just pure hype and speculation.
Right.
Now it's about formalizing things. It feels like a convergence point. You've got traditional finance, the regulators, and these decentralized protocols all bumping up against each other, trying to figure out what this new global financial layer looks like.
And that's exactly what we want to unpack today. We're going to try and cut through some of that complexity, give you the clearest picture of where the real infrastructure is being built and where the crucial policy changes are actually landing. Let's start in D.C. Things seem to be moving from confusion to actual urgency there. What's the headline legislative action we should be tracking?
Well, the biggest signal, I think, is that a pretty sweeping crypto market structure bill looks genuinely likely to pass before the end of 2025. This isn't just talk anymore.
Okay.
This bill, pulling in things like the Clarity Act, is really focused on finally drawing some lines in the sand about who oversees what. The key takeaway: it seems set to give the CFTC primary authority over spot markets, treating a lot of digital assets like commodities.
And leaving the SEC with
the stuff that looks more like traditional securities, tokenized stocks, that kind of thing. It provides, hopefully, some actual clarity.
What's really striking, though, is how much political weight this has suddenly gained. It's not just one party pushing this anymore, is it?
No, and that's where you see the real shift towards treating this seriously. We've actually got 12 Senate Democrats, people like Gillibrand, Cory Booker, who aren't just commenting on a bill, they want to co-author it. They want a hand in shaping the final rules.
Interesting. What are their main points?
Mostly 2 things. Definitely strengthening the CFTC's role, and significantly, they're pushing for an ethics piece, specifically banning elected officials from trading or profiting from crypto projects while they're in office.
Huh. That definitely signals they see this as major infrastructure now, not just, internet funny money. But, okay, passing a law is one thing, making it work is another. We're already seeing that with the Genius Act for stablecoins, right?
Exactly. Implementation is where the rubber meets the road. The U.S. Treasury is right in the middle of that now, asking for public feedback. That window actually closes October 20th.
And what are they trying to nail down?
The tricky details, like how exactly do you tax these things? How do foreign stablecoin issuers play by the rules? And that constant balancing act between state and federal oversight for things like BSAML, the Bank Secrecy Act, anti-money laundering stuff, foundational financial tracking.
Yeah. And speaking of tricky details, tax is always the headache, isn't it? Especially if you try to use crypto for everyday stuff. Every tiny buy is technically a taxable event right now.
Oh, it's a massive barrier to actual use. The Senate Finance Committee is actually holding hearings specifically on modernizing the tax code for digital assets. There's real debate about creating exemptions for small, routine crypto purchases.
Like buying a coffee.
Exactly. If you could just buy a coffee with a stablecoin without triggering a whole tax reporting nightmare, that would be revolutionary for everyday adoption.
That whole spectrum, from arguing about coffee taxes to stablecoins becoming collateral for massive institutions, that really captures the speed here, doesn't it? Stablecoins are clearly moving beyond just being trading tools.
Oh, absolutely. They're becoming foundational. You just have to look at where the big traditional players are putting their chips.
So where are they lining up?
Well, let's start with the giant. Tether. Reports are they're aiming for a frankly staggering $500 billion valuation through a private placement. They're looking to raise maybe $15–20 billion.
$500 billion. With a B.
Yep. Considering USDT's market cap is already around $173 billion, that kind of valuation puts them in the league of major global banks. Plus, they're making a serious play for the regulated U.S. market by launching USCent, a specific U.S.-based compliant stablecoin.
Wow. That's a major power play. How's Europe reacting to all this dollar-centric stablecoin dominance?
They're not just sitting back. They're organizing. You've got 9 major European banks, big names like ING, Unicredit, forming a consortium
Who do what?
to launch their own euro stablecoin. It's planned for the second half of 2026, and importantly, it has to be MiCA compliant following Europe's new crypto rules. The stated goal is explicitly about European autonomy in digital payments. They want a homegrown alternative.
Okay, so banks see the future of payments. Where do the regulators see the most immediate, powerful use case for stablecoins? What makes them really pay attention?
The CFTC is crystal clear on this one. Collateral management.
Collateral.
Yeah, specifically for the derivatives market. They're pushing hard on an initiative to allow stablecoins as tokenized collateral for margin requirements. Think about it. Instead of waiting days for wire transfers to settle margin calls, you could do it instantly with stablecoins.
Ah, okay. Speed and efficiency in those massive markets.
Exactly. They're calling collateral management the potential killer app for stablecoins within traditional finance. And again, they're asking for industry input on this. Deadline, October 20th.
That feels like a fundamental shift.
Yeah.
And it's not just happening at the high finance level, right? It's trickling down. Morgan Stanley bringing direct crypto trading to E-Trade customers soon.
By mid-2026, yeah. And not just Bitcoin ETFs, but actual BTC, ETH, even SOL. That's a huge validation from a mainstream giant.
And their wealth management head basically said this is just the start.
Right. Jed Finn called direct trading the tip of the iceberg. His focus was on the much bigger potential of tokenizing real-world assets, stocks, bonds, real estate onto blockchains. He sees it disrupting wealth management through efficiency, fractional ownership, instant interest payments, the whole 9 yards.
So if Wall Street is starting to build on this tech, particularly Ethereum, what does that mean for Ethereum itself? Is it still the Wild West? Or is that core decentralized platform getting, I don't know, more grown-up?
There's definitely been a narrative shift. You had Vitalik Buterin himself recently come out quite strongly, basically calling DeFi the premier, the killer app of Ethereum. It's less about the crazy speculation now.
And more about
Its original mission, really. Providing accessible, permissionless financial services, basic stuff like holding assets, lending, borrowing to anyone, anywhere without needing a traditional bank.
And we're seeing a kind of low-risk DeFi emerge as the anchor for that.
Precisely. Think basic savings accounts, fully collateralized loans, stuff that isn't super speculative. People are comparing it to how Google found its sustainable business model with search ads. It's a reliable, profitable core use case.
Does the data back that up?
Yeah, the metrics are interesting. DeFi losses are actually near historical lows right now, and the yields you can get on these simpler products are often genuinely competitive with traditional finance. And you still have dominant players providing stability, like a Bave holding something like 70% of all the lending deposits on Ethereum.
But for this to be sustainable, the underlying tech needs to keep improving, right? Especially scaling. What's the big news under the hood?
The main thing people are excited about is PeerDES. It's part of the upcoming Fusaka upgrade for Ethereum.
PeerDES.
Yeah. Basically, it lets network nodes verify data much more efficiently. They only need to check samples or chunks of data instead of downloading and storing everything. Which means it makes it safer and much cheaper for Layer 2 scaling solutions to post their transaction data back to the main Ethereum chain. It tackles a huge bottleneck right now.
And those Layer 2s are definitely booming. Look at Base doubled its value lock to $5 billion.
Yeah, Base is moving incredibly fast. Technically, they're doing interesting things like flash blocks, getting block times down to like 200 milliseconds. That's practically instant.
Wow.
And they're also working on the Base app, trying to integrate everything, chat, trading, discovery, to make it feel more like a mainstream app, less like complex crypto tech. Of course, there's also constant speculation about whether they launch their own token, which drives a lot of activity too.
That stronger base layer is also enabling some really cool real-world uses beyond just finance. We always like a good thinkable example here on The Vocal Technologist. Tell me about the studio behind Parasite.
Right, Berenson, the South Korean studio. They're actually bringing their intellectual property, films, TV shows, games on-chain, using something called Story Protocol.
And what does that let them do?
It's pretty neat. It allows for things like transparent revenue sharing for that IP, but also opens the door for fans to create and even monetize derivative works like fan fiction or art based on that IP, with the original creators potentially getting a cut automatically. It's a new way to manage and monetize creative content globally.
That's a fascinating bridge. Okay, let's pivot to the really cutting-edge stuff. AI, and how it's intersecting with crypto. We're seeing crypto enable some really sophisticated prediction markets and even machine-to-machine payments.
Yeah, prediction markets have absolutely blown up. They've processed something like $17.5 billion just this year so far.
17 billion.
Yeah. Kalshi is the volume leader, maybe two-thirds of the market, mostly focused on sports and financial event contracts. Polymarket is the other big one, known more for political and cultural event markets.
And they're getting creative with what you can even bet on, right? Like
Yep.
betting on things that don't exist yet.
It's pretty wild. Kalshi launched these crypto pre-markets. It lets you speculate on whether projects that haven't even launched a token yet, like Monad or Pump Fund, will actually launch one or do an airdrop.
So you can trade the potential of a future token.
Kind of, yeah. It's tradable exposure to hype and expectation before there's even an asset.
And AI is changing how we even interact with these markets.
Totally. Look at Polyglobe. It uses a map interface for geopolitical prediction markets. It uses AI to automatically tag events to locations and organize different narratives geographically. They're even talking about adding live data overlays like tweets, flight tracking, making it feel like an intelligence dashboard for traders.
That sounds intense.
And then you have Proximarket, which is moving beyond just yes or no outcomes. It lets you bet on things like, say, which specific news headline will be most popular, and it pays out based on how accurate your prediction is, using AI language models to judge similarity.
That level of machine intelligence naturally leads to, well, machines needing to transact with each other autonomously.
Yeah.
Tell us about this BI-402 protocol from Coinbase.
Right, BI-402. It's a clever use of an old, basically unused HTTP status code 402, which means payment required.
Okay.
The idea is to create a standard way for machines think AI agents, automated services to request and make payments automatically. If an AI needs access to data or an API that costs money, it could detect the 402 signal, understand the cost, and pay it instantly using a stablecoin and a cryptographic signature, all without human intervention.
So bypassing credit cards and banks for machine-to-machine commerce.
Exactly. It's potentially crucial infrastructure if you imagine a future where AI agents are constantly interacting and needing to pay for microservices or data on the fly.
And they're serious about making this a standard.
Seems like it. They're spinning it out into an independent BI-402 foundation, co-founded with Cloudflare, a massive player in internet infrastructure. The goal is neutrality, hoping it becomes as fundamental and widely adopted as things like HTTP itself or DNS.
It connects to that broader theme, doesn't it? If AI starts automating more tasks, people will need new ways to earn online. And crypto potentially provides those global payment rails, like Zora for artists, maybe BI-402 for automated services.
That seems to be the thinking, building the financial plumbing for a more automated, digitally native economy.
Okay, let's try and pull this all together. It's a lot. We've got Congress seriously debating market structure,
Yeah.
huge European banks creating their own stablecoin block, Wall Street diving in, and at the same time, AI agents getting their own payment system built on crypto rails via BI-402. The pace of change is just head spinning.
It absolutely is. But, it's always worth injecting a note of caution. As this tech becomes more foundational, the stakes get higher, especially around security. We just saw reports surface about a previously undisclosed data breach at Crypto.com involving that scattered spider hacking group happening before March 2023.
Right, I saw that.
Now, Crypto.com confirmed no customer funds were touched and only a small number of people were affected, which is good. But the fact that it wasn't immediately and transparently reported back then just underscores how vital, robust security and upfront communication are going to be as these systems underpin more and more of the financial world.
Absolutely. Transparency and security have to mature just as fast as the tech.
Okay, one last exciting bit for everyone listening. Joseph Lubin from Consensus finally confirmed it. The MetaMask token, MSK, is apparently coming sooner than you would expect.
Ah, the perennial rumor finally confirmed. That's a big deal for potentially decentralizing the most popular Web3 wallet out there.
Definitely one to watch. So maybe here's the final thought to leave you with. If stablecoins really do become the go-to collateral in traditional derivatives markets, and AI agents start autonomously paying for web services using protocols like BI-402, are we going to look back at this time when finance and technology were sort of separate industries as just quaint history? Or will the transparency built into these protocols just create a whole new set of ethical and regulatory puzzles for us to solve in a world increasingly run by code? Something to chew on until next time.
Spoken Tech for your ears.